to the Best Ever CRE show and my segment called Next Level CRE. That's right, not this level, next level. We're giving you an upgrade by listening to this podcast right now. So wherever you want to go next level, could be in your life, could be building pickleball facilities, could be in whatever your dream is. You can do those things by going to the next level. I'm taking a little shot at our guest who's on the air already with me. Normally I bring a guest in later, but this is a good friend of mine. So I thought we'd have a little bit of fun and bring her on early. Whitney Elkins-Hutten, how are you?
I'm doing fantastic today.
Good.
Thank
We're
you
doing
so
a
much.
pre-roll here, a little pre-roll. I'll introduce you in a second, but I thought I'd take a shot because I know that was, I think, Dan's personal project doing a pickleball thing, but I thought I'd throw that out there. Pickleball. Now those things are on every block, by the way, up where I live. There's like 4 of them within a couple miles of my house.
I mean, the first facility that he developed is literally in his backyard.
Right.
Literally.
He's this wise man. I look up to Dan in a lot of ways for what he's built. Because, like, you know what? Why not put it right there? I love pickleball. I know other people love pickleball. People want to pay to play pickleball. So why don't I do a pickleball court there where I can point to it? Right?
Oh, totally.
Good for him. We do a little segment on this show, Whitney, where it's called a Best Ever Toolbox, okay? Because Best Ever as a company has a lot of different things that we can offer people. It's not just a podcast. It's not just a conference. It's not just a newsletter. It's not just an online community. It is all those things wrapped up with a bow. So have you, my friend, been to Best Ever Con before?
Absolutely. I think 5 out of the 6 years. I've only missed 1 year.
Yeah. Well, we're going, they took a break during COVID or whatever, and then we're going up on this year. Believe it or not, because it was done years ago, this is going to be Best Ever 10. Best Ever Con 10. Can you believe? BECX, the Roman numeral X, like the Super Bowl, right?
I can't count, guys. Sorry. Yeah.
No. I have not been to all of them either, and this is back in the day when Joe and Ben were just doing them on a smaller scale, but it's grown and grown and grown until they attract cooler people like you and me to come to Best Ever Con. So when you go, your experience at Best Ever Con has been what? And tell me, why should the Best Ever listeners consider coming to Best Ever Con real quick?
Well, I'll tell you about my first experience at Best Ever Con. Okay. So one, I had just started getting into scaling up in multifamily real estate on my own, buying my first apartment building. And there wasn't a better room that I could be in.
Yeah.
Just, the amount of knowledge that market knowledge that I got, economic knowledge, just, touching on every single piece of how to acquire the real estate, manage the real estate, dispose of the real estate. I mean, where can you get all that knowledge and absorb it under one roof and then have all the networking? That was amazing. Now, the first one I went to, I was a little nervous as a female. Walked in the room, shortest female bathroom line ever. And I met my first
It's
two.
It's gotten longer. There's been more and more women at
it is totally longer, guys. Not the same experience. But the first one, I met my first 2 partners there at Best Ever. Really? So anyways, I think
I got to tell you, dozens of people that I've talked to have formed partnerships. But Whitney Sewell met his partner Sam at Best Ever Con. My partners, Justin Fraser and Hervé Francois, and I decided to form our company, DeRosa Group Management. DeRosa Group's been around for 20 years, but the 3 of us decided to bond together and join forces over a bourbon at Best Ever Con. There has been so many partnerships that have been formed there. I believe that PassiveInvesting.com, dare I transition to them? I believe that maybe Dan Hanford and his partners Danny and Dan met at Best Ever Con too, maybe they met earlier than that. But I'll just throw them in the box too, right? Let's pretend they did. I like Best Ever Con because it's a place where industry experts are speaking, not lots of gurus, nobody's selling in the back of the room. It's made for those that are at level 2. Once you've made it past level 1, done a couple of deals, as Whitney said, looking for an apartment building deal or done an apartment building deal, or maybe just, you want to get around some next level folks, Best Ever Con's the place to be. So guys, Best Ever listeners, go to bestevercre.com and pick up a early bird ticket for Best Ever Con because it's going to be a phenomenal experience. This is Best Ever 10. There's a bunch of stuff that people have up their sleeves. So enough about that. Guys, I want to just have you meet, I dare say this is my friend now, Whitney Elkins-Hutten. Whitney, thank you for joining us today on the Best Ever CRE show.
Absolutely. My pleasure to be on. And why are you
Yeah.
saying, I say, my friend? We're
Well,
friends.
well, I know, right? Well, it's funny. Not only I've just bumped into you a lot of conferences, and we've hung out, and we've broken bread and all that kind of stuff. But let me brag on you real quick. Let me brag on passiveinvesting.com, best company name ever, by the way. Passiveinvesting.com. What do they do? Passive investing. Passiveinvesting.com is a 1.5 billion dollar AUM organization with 430 million in private loans. Also, they paid out 51 million in distributions. Not only do they have investments, they also distribute a ton of cash to their investors. 51 million bucks going out the door. 3,500 units of multifamily, 1,700 units of self-storage, and 30, not one, not two, not 10, not a dozen, 30 car washes. That's right. PassiveInvesting.com is one of the A-plus staple organizations in the real estate industry. And Whitney is also a very cool name. She is the Director of Investor Education. Well, how cool is that? Whitney, welcome, and tell us, what is the Director of Investor Education? Do tell.
Well, thank you. So the Director of Investor Education, that was the title that, when Danny and I were discussing how I could be involved in the company, I was like, hey, you know what? I've come from the Director of Investor Relations role. I love working with the investors. And where I'm at in my life, I would love to just educate the investor and then let somebody take on the quasi asset management, the bridge between asset management and the investor. And so if I have to define it, I get the best of both worlds. I get to be the person that goes out and does a lot of the marketing, the public speaking, but then I also get to walk the investor through the whole journey until they're ready to invest. And then I pass them off to our investor relations team.
That's great. That's great. Because you know what, Whitney, I find that investors, when they consider doing a passive investment, they think they know. And it's not that, that we're talking down to them or whatever it is. There is a lot of education that needs to happen for investors, for them to answer questions like, hey, I'm going to invest with my retirement account. Is that legal for me to do? Because I've had my financial planners told me it's not legal. True story. Financial planners running around telling people it's illegal to invest with their retirement account in real estate. They're right, of course they're doing that. But there's re-education that it takes for an investor to understand that there's another place for them to make money aside from Wall Street. And so investor education from a up-leveling standpoint is 100% necessary. What are some ways, aside from coming on amazing podcasts like Best Ever CRE, what are some ways that you're doing that for passiveinvesting.com? What are your education outlets you're doing for the hundreds, probably thousands of investors that passiveinvesting.com has?
Yeah, so we run a couple different podcasts, and then we have, our education pieces, but we do our Passive Investing Made Simple show. There, I am helping investors just understand all the different topics that are happening in the market. We have our Passive Investing Boot Camp, where we're focused on the skills that passive investor needs to acquire before they place their investment. So that's a great place. You can find all this free on our YouTube page at passiveinvesting.com, spell out .dot. But the passive investing bootcamp literally starts somebody out with like, what are your goals? What's your risk? What's your timeline? Let's walk through. Based on that, operators, market steals, asset classes. How do we track our portfolio? So all those skills that somebody needs to develop to be a solid financial, to have financial knowledge in the space. And then we also have our Multifamily Investor Nation podcast for somebody who wants to dive down the rabbit hole of multifamily specifically. So that's our internal education.
Yeah, that's the internal. Now, I guess what I was going to say is about like that's a great funnel. How are you guys getting people into the funnel? How are you attracting people to the company to learn? Like I'm not a marketer, but a lot of marketer people talk about top of the funnel, right? And so you're like middle of the funnel stuff. People are like, okay, I know passive investing is good. I need to do it. I want to learn from this organization. And so let me jump in and learn. Hopefully maybe invest with passiveinvesting.com and with other people, right? What are your top of the funnel stuff? How do you like bring awareness to the organization to begin with? Is it through YouTube and podcasting too? Or are you guys doing other stuff like paid per click marketing or other stuff to get people into your ecosphere to begin with?
Yeah, a combination of all that. I would say our strongest top of the funnel marketing is putting together high quality educational topics. And, we leverage social media quite a bit. And we honestly don't pay for majority of our leads that come into the
Mm.
company because of that. But we will, I mean, it is a viable lead strategy. Sometimes we will have targeted ads to, our direct investments or even to educational pieces. I do a lot of guest podcasting like here.
Hmm.
And then I also do a lot of guest speaking conferences and
Yeah.
meetups and RIAs and stuff like that.
It's great that you guys don't need to do pay per click marketing. We're experimenting with it. I know there's a lot of folks out there that have they fit whatever equation there is. Best ever listener. You put like if you figure out the online marketing thing, you put $1 into the machine and it spits out X amount of leads or X amount of potential clients that you can close for whatever venture you're in. If you don't do it right, you put $1 in and you kick the machine on the side and saying, "Hey, wait a minute, this machine's not spitting any money out, right?" So it could certainly hit or miss. And I can't tell you, I'm embarrassed to tell you how much money we spent trying online marketing last year on our own, and then we brought in some consultants and stuff like that. So I'm glad to hear you guys don't do that. Not that it's a bad thing, but it's certainly cheaper than doing lots of paid pay per click marketing and hoping that it pans out.
Well, we've worked with consultancy groups as well, that talk to big game about the pay-per-click marketing space. And we can get a lot of great leads in the top of or I should say, we can get a lot of leads in the top of the funnel, but do they convert? No.
Mm.
So we really try to target the warmer lead, somebody who is searching out for assets in the space, searching out for the education, and as opposed to somebody who like saw us on Facebook and decided that was a cool graphic, let's click on it, right?
Yeah.
We didn't find that converted very well.
Yeah, I mean, it's good to you can get clicks. You sure can. A lot of
Mhm.
times they're just looky-loos. A lot of times, who knows what they're going to turn into or whatever. So love to hear. By the way, best ever listener, if you or somebody is doing a great job raising capital using pay-per-click marketing, Whitney and I would love to hear from you. We want to just hear how you doing that? Because it sounds like both of us have tried it and not made it work out. It has not worked out very well, but I know somebody out there is doing it. So I'm curious how it's working for other people. So you've been investing in real estate for a very long time, and as has passive investing. What are some changes you guys are seeing in the world? I mean, you guys used to be a multifamily, big bullish on multifamily, but I get it. You can't. Somebody told me something a while ago. You can't change the market. You can only hope to participate in it. And so if the multifamily market's changing, you got to pivot too, right? So you guys wisely pivot into some other things, doing other stuff now. Where are you at passiveinvesting.com seeing things right now with regards to investor affinity, deal flow, that kind of stuff? Where are you
Mhm.
seeing the world?
Well, we're still continuing to underwrite multifamily and self-storage. We think,
Mm,
especially the multifamily space, that there's going to be opportunity coming
hmm.
online. Is it going to be the next 6 months, 12 months, 18 months, right? Self-storage, I think we still have a little bit of a ways to go because, it's cycling, I feel like, behind
Hmm.
multifamily. Um, Now, where are we right now in the space? Well, one, we're continuing to optimize our current assets. I think when you have the kind of a downturn, this is an amazing time to trim the fat, get everything optimized as best as you possibly can. But also, we're really encouraging our investors to invest across the different layers of the capital stack because the market right now is giving us debt investments. And we have our real estate debt fund. And so we like partnering with our fix and flip real estate investors, the active investors, making loans to them because they're less price sensitive and
Yeah.
they're continuing to find deals in this market. And so that gives our investor the opportunity to bring this cash flow layer that they may not had been done before, or one
Yeah.
just wasn't focused on it because they were chasing tax benefits or all the cool things, the reasons why we all got into multifamily real estate. It's in a unique time for us to be able to make sure that we're shoring up our own portfolios. And if you
Hmm.
don't have that debt layer in, I know you guys have a debt fund too at DeRosa Capital. This is an amazing time to get
Hmm.
that inserted into take advantage of the current market and get that layer built out.
Hmm. Yeah, yeah, absolutely. I mean, I think that the market in general has shifted towards more security, the desire for more cash flow, and more security,
Mhm.
right? And so that's why I think our debt fund's going well, your debt fund's going well, because it's secure. It's collateralized, right? Like likely your borrowers, just like ours, are signing off on a personal guarantee. It's got likely first, maybe second tier lien position on the property. And so it's secure. God forbid the borrower doesn't pay the note back. I've got a personal guarantee, and I've also got I've got a lien on the property,
Mhm.
right? Yeah.
I was going to say, I still am seeing investors take a lot of risks that they don't need to do right
Yeah.
now. Meaning they see monthly cash flow, but they're in kind of a risky, preferred equity, private credit.
Yeah.
So we still, there's a lot of education that I'm doing between just because you see cash flow, debt investment, that, let's pick that apart, right? You can have debt investment in ground up development or an entitlement deal versus, what we're talking about is a debt investment in first and,
Well,
maybe
let's
a
compare
second
that,
lien.
right? Like for the best ever listener, there's a pref equity investment you can get yourself in, which pretty much means that you're going to get a monthly payment from the deal. And it depends on what your security is where you are in the capital stack. If you're the debt, you're the very, very first person to get paid. You can picture like the capital stack, maybe picture like a silo sitting there. And the very, very bottom of the silo is the bank, the debt, that kind of stuff. Right on top of that is pref equity. And then above that is common shares. But to your point, Whitney, the pref equity position, although it could be more attractive, is also not collateralized. You don't have a lien on the property. You're just promised to get paid first. You have an IOU. That's it. You don't have a personal guarantee from anybody. You don't have any collateral. There's nothing you can go get if you don't get your money or anything like that. And so people, I think, are being enticed by those pref equity positions because they pay a little bit more than what a debt fund can return anywhere between 10 to maybe 10, 11% high side. But a pref equity investment, ooh, I'll pay you 7% current right now, but I'm going to pay you another 7 or another 8 or a 9 on the back. So you're going to make, Mr. and Mrs. Investor, 15, 16% on your money. You just got to be okay with an IOU of that 8, 9% that it'll hit you later, down the road. So people think that that's solid and it's collateralized and that it's a good cash flowing position, but it's actually way more risky, markedly more risky than a debt fund investment could be.
No, I 100% agree. And, you put it in terms of collateralization. That's exactly what we're talking about. But
Yeah.
also, you can just take a look. Are you a line item? Meaning you're a debt, meaning you have to get paid because you're on the profit and loss
Yeah.
statement. Are
You're
you
are you
below?
obligation? Are you an obligation or are
Yep.
you a pay if we have it a line
Yeah.
item? Right.
Uh, are you an obligation or are you a partner?
Yeah. That's a partner. Right. Yeah. Partners make money if they win. If the property doesn't win, they don't make money, is what it is. So yeah, that's interesting. So you're liking passiveinvesting.com is liking the leaning into the debt positions, leaning into stuff that's a little more secure. Okay. You're still
Well,
underwriting
we'll do it all.
multifamily. What's that?
We continue to do it all.
Yeah.
We're continuing to look at the multifamily. We're continuing to look at the express car wash space. But there's still, we want to make sure if we buy an asset that it is, stable with the current debt terms. And that's not always turning out to be true right now. And
Hmm.
so, when you look at our express car wash deals, in a lot of the markets that we're looking to purchase in, either the seller's expectations have not leveled out with the current market, where the current market is, or, the debt's still just a little bit
Mm,
outside of, making the deal an actually good deal.
yeah.
So we're continuing to look at deals. Eventually, we may not do 30 car wash deals this year. We might get, 3 or 4 done. Right.
Yeah.
So
Why car wash? That seems to be like, all of a sudden the last couple of years, what a lot of people are doing, and Dan you guys were involved in this before he had Shaq on stage at Multifamily Investor Nation conference years ago. And I saw Shaq up there with him, and Shaq used to own a ton of car washes. I think that was one of his first ventures after leaving the NBA, was just something to get into. And I think he's exited from them. And I know they were bantering about car washes up on stage and everything like that, right? But I know he was involved in that before. So why car wash to begin with? And just tell me, like, what's the investment vehicle even look like for somebody considering it?
yeah, so there's so many different types of car washes. We're primarily talking about the express car wash space, and one of the
Hmm.
unique opportunities there. It's kind of like the fast food of car washes, right? So we have a very long tunnel that we can run, 400, 500 cars through a day with maybe just 3 full-time team members. So it's very optimized, operation. There's a lot, we took a lot of what we learned in the self-storage space from a technology perspective and layered it onto our car wash operation. So it can be a very highly optimized, business and heavy on cash flow. I'm just kind of chuckling in my head. I mean, some people, like, if you're like, from my vintage, you think of Friday, like, how did they launder all their money? They ran it through the car washes. Maybe you watch Breaking Bad. I mean,
Yeah.
they
Yeah.
do bring in a lot of cash.
Yeah.
But when you buy, right?
Breaking Bad.
See,
I love
it
you with
caught up
Breaking
with
Bad.
you.
I
You
love
now
you
know
went
what
to the Breaking Bad analogy of like Walter White buying the car wash so he could launder his money. You know,
that's
you
not
should
what
just
we're
say
doing,
now
guys.
that passiveinvesting.com is not a money laundering outfit. The views and opinions expressed by Matt and Whitney are not necessarily no, but I get it. But I get right. It is a cash business to a degree, right? So
It gives the partner, the limited partner, an opportunity to not only be in real estate, but if we buy it correctly, we buy the land, we buy the car wash, to be in a highly optimized cash flowing business that takes advantage of real estate as well. So that's really where I spend a lot of time educating our investors. You're not in commercial real estate. You're in a cash flowing business. Okay. Like, tax structure is different, depreciation is different, but you do have the security of owning the land as well as the business that sits on top of the land.
Okay. And so are those owned by different companies? Is that separated somehow? Does that create like some tax advantages from owning the land? Kind of help me unpack that a little bit.
Yeah. So, we have our brand Hurricane Car Wash. All 30 of our locations roll up under that
I
brand.
love that name. I think I love that name because you guys are all in the Southeast. So it's like, hey, we got a lot of hurricanes down here. So what the heck? Let's call it
Yeah, you
Hurricane.
can get a category 1, 2, 3, 4, 5
Can you really?
membership.
Is it really with the categories?
It is.
They do that? That's so funny.
The branding really hits home
Why
with
not? What the
people.
heck? Right. But it's funny because it's kind of like you're driving a car through a hurricane. Is it like a drive through? Like you're in the vehicle, or do you got to get out of the vehicle?
No, it's like a 120-foot long tunnel. It can be anywhere from 80 to 120
But you
feet,
stay in the car.
but you're still in the car,
Oh
right?
man.
So
My
you
kids
can
love those kind of. There's
exactly.
nothing better than taking a child through a drive-through car, or it's an absolute torture. They're going to scream their head off and think that they're dying and being eaten by the things or whatever. But hopefully, your kids, best ever listeners, can deal with it. But yeah, you gotta love the drive-through. So okay, so the drive-through car wash. Sorry, I'm diverging you because the name Hurricane threw me off. I love it. So keep going. Talk us through it.
Yeah, so we'll buy in packages of, say, like 2 to 7 car washes at a time, just to optimize the lending side of things.
Yeah.
And investors have the opportunity to, see what assets are in each LLC or each kind of portfolio package and invest in the various packages that they want. But we manage, everything rolls up under our vertically integrated property management company. We spun that company from the ground up. We own it. And so that's one of the more unique opportunities in the space. Not only do we have the real estate, we have the business on top of it. So you've got the cash flow and everything. We'll talk about depreciation in a minute. But you have to think about the exit. So when we underwrite a car wash deal, we are looking to either exit each one individually as a package deal, roll up to a REIT, or possibly go IPO. And each one of those has their different multiples, but you're looking at somewhere between a 2 to 20x multiple on your exit. So I dare say you could get up to we have seen one car wash vendor get up to 40x multiple for their investors upon IPO. Now that is like, shoot for the moon, land in the stars type situation.
But these things are sold like on EBITDA, right? So like they're viewed as a business. For a buyer is going to see this as a EBITDA play, which is translating real estate investors. All that is NOI. This is another thing to call NOI, right? So EBITDA, the earnings, but let me see if I can get this right. Earnings before interest, depreciation, and appreciation.
Taxes and amortization.
Amortization.
Yep. You were so close.
Yeah.
But yeah, so
you can tell Matt does not own car washes, So yeah. Okay.
So it's a little different, right? Like when you're evaluating a multifamily building, you're going to take the NOI, you're going to divide it by the cap rate, and that's going to give you a general valuation. And then you're going to adjust from there. just like you said, you're going to, with a business, any business, say $1 million and above, you're going to take it based on cash flow and do a multiple of the EBITDA.
Yeah.
Now, so like the cap rate in multifamily real estate, the multiple in the business space is going to be, what kind of business is it, the size of business, the
Yeah.
location, right? That's going to change. So car washes tend to trade on an about 10, they were trading upwards to 12x EBIT. I think we were more closer to like somewhere between 9, 10. We try to buy it like 7, 7.5
Hmm.
in order to
Hmm.
capture, like you would in multifamily, that equity, right? Buy below value. Now, the cool thing here is so we're buying, if we acquire a car wash as opposed to building one from the ground up, we're buying from mom and pops. Now, why is that advantageous? Is because remember, there was no property management in the space. Okay. We started the first property management company. So, this mom and pop, they might have opened 1, 2, 3 car washes, but they need 4, 5, or 6 to be able to hire that operational manager and get out of the business. So it's super hard. And when you're thinking of a capital investment somewhere between $4 to $5 million per location, I mean, that's a lot of capital to really be able to scale. And
Mm.
so what we've been able to do is like leverage, our performance, our lenders, everything like that to come into the space,
Mm.
acquire, several locations. We've built, a couple from the ground up as
Yeah.
well. And, optimize, right? A lot of the mom and pops, they don't have the scale to be able
No.
to leverage vendor contracts, repair contracts,
They
all
don't
that
like
sort of
they
thing.
might not have the thought to do what's very valuable to people like you and me today in today's world is things like loyalty programs, right? Like if I am going to join the car wash, if I'm going to go to the car wash on the street from my house, I will be very much more loyal if like every 10th car wash that I get, if the 10th one's free. If they've got like a cool Google pin drop with reviews and ways I can get to know them online before actually going there and that kind of stuff. These are all modernized. I mean, people take all this for granted now, Whitney, but guess what? All that has been around for maybe the last 10 years, if not less. And so if you've slightly taken your finger off the pulse a little bit, businesses don't have all those things that I just said, and it's they're just younger generations that understand what today's customer needs can integrate those things pretty not easy, but easier than an older generation may be able to figure it out.
Yeah, it's kind of like the meat on the bone. Like what you would look for a property below value with a little bit of meat on the bone to where you could boost revenue. Same thing here. We're looking for, opportunities where the current owner operator hasn't implemented. Maybe they're not even doing subscriptions at all. Not that we want 100% of the customer base to move to subscriptions, right? We want a blend of the two, but
But you want to
subscription
offer it.
revenue.
You want to offer it. Yeah, you want to offer it. Yeah,
Yeah.
you want to at least offer up a subscription. If I've got a construction vehicle or a car that's going to get muddy all the time or whatever, you got me. If you're offering a subscription service, you got my business.
Mhm.
Where other organizations might not have that. Did you touch depreciation yet? Did we get to how that is possible in a car wash? If not, please go there for me.
Yeah, so depreciation works a little bit different in business because we can get higher depreciation rates for express car washes. And the reason is that the whole building is a piece of equipment that we can depreciate
Okay.
over the 5 years of the asset.
Hmm.
Okay? Not 27 and a half,
Yeah.
like a multifamily building, not
Yeah.
39 like a self-storage building, but 5 years. Now, then we have bonus depreciation. Wherever we're going to land with that right now, 2025,
It'll
it's
work it out.
40% this year, right? Will it go up to 100? I don't know.
Who knows?
Who knows, right? We're all kind of like in the real estate space, we're all kind of crossing our fingers for a lot of things to change. But long story short, that doesn't mean that I don't get the depreciation. I just have to wait and take the certain allotments over 5 years. Maybe I get an extra 40% in year one, but I
Hmm.
don't lose that ability to depreciate. I can just take the larger chunks over a shorter period of time.
Yeah, yeah. That's great. So, by the way, the 5-year thing, does that mean that the equipment, like that, like mechanical box that washes my car for me, is that thing only made to last 5 years? Do you have to replace it in 5 years, or is it designed to last longer than that?
It generally will last longer. I mean, I don't have an exact number,
No,
but I
that's
know we've acquired some, locations where the equipment's like well over 5 years old, 7 to
mm,
10, right? you put in a HVAC system in your house, and the person who's putting it in probably says, "Oh, this has a 10 to 15-year lifespan." I know when we bought our house, ours conked out at 40
Hmm.
years.
Yeah,
We ran
sure.
that puppy till the end.
Good for you. That's bonus. You probably got maybe like 15, 20 years worth of bonus there. It's great. I know that machines like that can tend to take wear and tear, and they probably wash
Mhm.
thousands of cars a month, and that. So at some point, every machine is going to break at some point. So I didn't know if that was something that was a factor or not. But I get it. It is a fixture. It's not the physical structure. The whole thing is considered to be a fixture, that's how you
Mhm.
can write it all off.
Yeah. Well,
Um,
and that's, the reason why, investors are given, depreciation is to keep the property in repair, right? Because, the IRS knows that the property, a multifamily building, a self-storage building, an express car wash, they're going to break down over time. And that, hey, let's give this back to you in a depreciative loss because at some point in time, you're going to need to upgrade and
yeah.
replace that.
Yeah, right. Yeah, you got to be able to write it down because it's going to reach the end of its useful life at some point, and you're going to want to replace it. And that instead of just like every time you invest in it, that cost goes on top of the old cost, and on your books, you can't just slowly remove it from your books. I get it. Um, where are you seeing the change? Going back to equity investing, right? You're like sitting right in the middle of equity, coming into the company and everything like that. Where are you seeing the equity world going, right? Passiveinvesting.com has, of course, raised millions of dollars in that. What are changes you're seeing in the space? We've talked about investor affinity for things, but I'm talking about like the way the capital gets raised, the way things get allocated, what in the way investors get handled in the future. If you want to touch the Bitcoin third rail, you can, and that about whether crypto and all that jazz is going to change our space. What do you think? Where do you think things are going?
Well, I'll go ahead and take Bitcoin off the table. I have no idea. For me, it's a total black box for me. I mean,
Yeah.
we personally, we put just a little bit so minute, portion of our portfolio into cryptocurrency, and mostly it's just to be like, oh, okay, well, if everything goes offline, we can now, move. We're traveling out of country here in a little bit. I'm like, well, if something happens to my credit card, I can go to the ATM and pull out Bitcoin. Like we use it for that purposes.
I
As far
joke
as
with
it,
people though about this though, Whitney, right? If the world completely goes to where, right? You need electricity to get to your Bitcoin. You
right?
know?
We got bigger
If we ever go
problems
back
than
to
that.
living in caves and like cooking around campfires and all that stuff, those Bitcoin bros and gals that are out there are not going to be able to get to all this wealth they've built online. You're going to have to just go back to bartering for gallons of milk and sheep hide and stuff like that. That's it.
Totally. Well, okay. I know we've gone. I'll
Hey,
indulge you
I'm
for a
Mr.
little bit.
Tangent. We're buddies here.
Yeah. Well,
Yeah.
so one of the things I teach my investors, is to be prepared for maybe it's not going to be like the end of days scenario, right?
Yeah.
Maybe it's just like a winter storm that takes your or your power grid offline for
Yes.
several days. Like have food on hand, have
Yes.
water on hand, have cash at home,
Yeah.
right? So you're not sitting here going, "Holy snap, I can't get my Bitcoin, I can't get my credit." Yeah, be prepared for that. Like have
Yeah.
a different
Prepare for
way,
anything.
a
Right.
radio, like ways to communicate. So we actually have, so for us, our biggest threat, aside from blizzards where I live in Colorado, are going to be fires. And so we have
Yeah.
a whole go wall. And unfortunately, we've had to put it together because of fire situations.
Yeah.
And so it's like we've got a bin for food, cleaning supplies,
Yeah.
gasoline, water, and we have our
Yeah.
trailer and we just throw it on, throw it in the trailer and we can leave. Like, and
You can buy MREs online on
we
Amazon.
have
MRE?
MREs.
You have MREs? Have you tried one?
Well,
You should
yeah,
try one.
but you don't,
You should
that's
try one
like,
because
you don't
maybe
want to
it's
have
like
to eat
maybe
it.
I'd rather be dead than eat these things. Like
My husband used to work fire, and when we bought the MREs, and he was like, I'm never eating this. Like, if
Yeah.
it expires, we're throwing it out. I'm like, okay,
All
but just in
right.
case.
That's fine. You never
Yeah.
know. Yeah. I've
I was
never
like,
had one, but I've seen them. I went hiking a while ago and a guy had an MRE out and I'm like, I don't know about that. It looks like dried black tar. That's what that looks like, But anyway, we digress a bit. The world, going back to how we got to
Let's go back to the
doomsday, because
original
I
question.
took a shot at you about the crypto thing, which I think crypto is actually not a bad investment. I don't think it's a good investment for a what if the world goes to shit type of an investment. I don't think it's there for that, because I don't think that if the world went to shit, your crypto would be worth anything,
Mhm.
whether you can get to it or not. But I do think it is a bet in a changing world, right? Let's leave it there. Okay, moving on.
Yeah.
Changes in the investing ecosphere. There are those that say that the SEC may be changing the rules on what an accredited investor is. I've heard that's coming down the pipeline. Have you heard about that?
That's been in place since about 2017, but I think we're
Hmm.
getting closer and closer, especially, with the current administration and their willingness to deregulate things.
Yeah.
That's probably, at the end of the day, is it going to be a deregulation play, or is it going to be where we actually allow more people to invest into
Yeah.
this area and
Hmm.
let them take on the risk? Or is it going to be a definition change
Yeah.
where, and I don't really know where we're going to land with that, but that's interesting to think
Here's
about.
what I've heard. I'll tell you what I've heard.
Mhm.
I'll also tell you what Matt thinks, right? You can be an accredited investor now if you have a Series 7 license as a,
Mhm.
like a broker, not a broker dealer, whatever, but an
Yeah.
agent that's able to sell equity. That's called a Series 7 license. This is just an exam you take to get that. Now, currently, when you pass that exam, you got to hang it with a broker, right? But that exam is very financially oriented. It says, I'm sure there's plenty of business ethics and that kind of jazz in there, but there's also plenty of, math and all that kind of stuff. I know plenty of people. I've not taken it myself. I know plenty of people that have. What if there was a test that was similar to the Series 7 exam, maybe exactly like the Series 7 exam that someone has to take? And if they can pass that test above a certain score, then you can be an accredited investor. I've met very like people that qualify to be accredited, but really are not educated. They did not meet Whitney. They did not meet a head of investor education, so they're not educated investors. So I don't think net worth should have anything to do with investing prowess, because you could have inherited that net worth. You could, be lucky enough to have a job that pays you really well, but you might not know much about investing. You just might not know a lot about your job. So I think that an exam or some way to prove to the SEC that you know what it is that you're looking at is a better idea. I'll say one more thing. The numbers of $1 million in net worth or 200,000 of income if you're single, 300,000 if you're married, those were defined decades ago. And decades ago, $1 million net worth was a lot of money. I'm not saying it's not a lot of money now, but it's a lot less money now than it was back then. And
Mhm.
so they certainly should do something, because those are not, I do not believe those are good measuring sticks anymore. What do you think?
Yeah, I mean, I definitely agree with, and that's what I meant as far as like definition change, with the definition of the income or the net worth piece.
Yeah.
Let's hypothesize, somebody has $1 million in net worth and maybe
Hmm.
400,000 is tied up in their house. And then so they have technically $600,000 of liquid capital.
Well, they
Now,
can't, if you have a million in net, the million in net worth for SEC, sorry to cut you off, it is not
it
allowed to
doesn't
include the house.
include,
Yeah.
correct, right.
But
Okay.
that could be
But
a million in an IRA that they can't touch, by
right.
the way. But that could be a million, like maybe 100 grand in savings, 800,000 in an IRA, and then like 100K in other cash investments or something like that. So they could be very IRA bound, but keep going.
Yeah, okay. Let's just,
Hmm.
okay. We'll say they have a million of liquid cash. Most minimums right now are like approaching 50, 75. I saw one minimum today from from somebody I've worked with that's now 250K. Where
Oh,
now that person, that quote unquote accredited investor, is investing more than 10%, maybe up to 25% of their liquid net worth into that deal. And so we need them to be educated if they're going to do that. We need them to assume that risk to do that.
hmm.
Now, I would caution anybody, not 10% with, any one operator, any one deal, that's that, you got to know the type of risk that you're taking on there.
Yeah.
10% with an operator over multiple deals, okay, that's a very different story, right? You got a little bit of wiggle room there.
Hmm.
But this goes back to the education, them being able to, the investor understanding the goals, the risk and timeline, being able to put together that investment thesis for them
Hmm.
before they actually make an investing decision. And
Yeah.
most people jump from earning their income or their net worth to investing, and they miss out on the whole middle ground and making all those investment decisions
Yeah.
while the dopamine's not running in their head, right? Like,
Yeah.
while the time pressure is not on. So
Do you
that's
think,
really,
well, look, sorry, do you think there's a way to reduce 50K is a lot of money for a lot of people, right?
Mhm.
75K, 100K, whatever. Is there a future you see that the SEC or the government, so to speak, or just, syndicators in general, there's no law that says that, that it's not like the SEC has in their rule book that it says thou shalt have minimum investments of 50K. It doesn't say that. The reason why is because the amount of legal paperwork that we as syndicators have to do and the amount of costs that we have in setting up these things is so much restrictive that, okay, we don't want to have, 400 or 500 investors in one deal. But what if
Mhm.
you could? What if it were easier,
Yeah.
to
We're
aggregate
we're putting
investors?
together a Regulation A fund right now to help get around that very barrier.
Yeah.
Now, who are you dealing with? The legal paperwork's not with the limited partner necessarily. The majority of the legal paperwork is now with the SEC.
Yeah.
So, that takes a lot of time and an upfront cost and expense to get that done.
Mhm.
So, I mean, I think we're going to see changes. I know people have talked about like, well, what if we can, purchase homes on the blockchain? Wouldn't that be cool? If we can purchase one home on the blockchain, why can't we purchase a multifamily building?
That's a
I
bad
I
idea.
don't my head just doesn't wrap around all the different risks that are associated with that.
Hmm.
But yeah, like if the blockchain goes down, if it gets hacked, if quantum computing comes online,
Yeah.
blockchain don't mean anything, right?
Yeah. Yeah. Well, there are people that are doing tokenization. Maybe that's what could come in. But the SEC came down on that too, because guys were saying, okay, here's the deal. You can buy a token, right? And a token costs 10 grand. Okay. And there's no rules that says you can't buy this token. There's no SEC rules. You just buy a token, right? But with that token, you can then go and take the token and buy yourself a nice shiny piece of real estate equity with it, right? You didn't buy real estate equity with your cash. You bought a token, and then you took that token and you bought real estate equity. So it was like, it'd be the same thing as me saying like, hey, you're going to buy this bucket of rocks. And this bucket of rocks costs 50 grand. They're very good rocks. And with that bucket of rocks, then you can then go buy a piece of real estate. It's a transfer of equity interest. And they were doing it to get around the SEC rule about, about accreditations and stuff like that. It's like, I'm not selling real estate. I'm just selling, I'm just selling tokens. That's all. So that got shot down, but maybe there's a way to do other things. Now, the reason I said this is a bad idea, somebody was pitching me a while ago on this concept. The fact it takes a while to close a piece of real estate, right? When I buy a piece of real estate, put it under contract, it's going to take me, listen, you could close it in like 10 to 15 days, maybe, if you're using hard money and if everybody's scrambling and not getting any sleep and sprinting to the closing table, maybe you can get it done in 15 days. But for the most part, for the kind of deals that our companies are doing, mine and yours, maybe 60 days, maybe, right? The pitch was, what if you could use AI and blockchain to compress that closing timeline, and you could do the back title search and do all the things that it takes to make the closing happen, and it's really title work and legal and contractual stuff and inspections and all that jazz. What if you do inspections up front and you could close within a day or two, right? That's an interesting concept, isn't it? What if real estate could close within a couple of days?
I really think, when I look at AI, I think it's going to really impact legal and title
Yeah,
in the real
you're
estate
right.
arena
They sure will.
first. So I know a lot of people are trying to use it for underwriting and to speed up all that. I mean, for me, I know I'm still having problems with that, with my own personal investing. Yeah, I mean, I got in a fight with it the other night whenever I pulled amortization table, and I'm like, what? This is
This is
compounding
garbage.
interest. Like
Throw it
amortization
away.
is simple interest, guys. Like it's just amortized. And
Well,
anyway,
I found that AI actually has a problem with math. Believe it or not, you would think that
it's a language model. It
what's
looks
that?
for patterns,
Yeah,
right?
it's a language model. It is not a calculator, and
Mhm.
I'm not saying go into AI. Don't be yelling at me on social media, guys, or in the comments on this episode. Like AI knows what 2 plus 2 means, man. I'm sure it does. But I have seen people tell me, and I've seen it on AI myself, that it does make math errors. You have to check AI's math because, like you said, it's a language model. It is going out to the vast internet for the information that you're asking it for, and the internet is not perfect. And so it's
Mhm.
probably there's probably bad math on the internet that it's coming up with. So yeah, I don't think it's ready for math. I still don't like the idea of, so best ever listener, it's a terrible idea to use AI and blockchain to allow real estate to close in 2 to 3 days. It's an awful idea. Don't do that because that'll really hurt our industry, because mortgages and whatnot are in place because real estate is very tough to trade, because you can't sell and you can't buy and sell it like you can stocks. That's
Mhm.
why. And that's why we can get debt at 80% loan to value. And that makes our market very stable. If AI and that kind of jazz gets in and allow us to sell real estate on a day, like, buy one day, sell it the next day, forget getting debt anymore. You're not gonna be able to get debt on mortgages on real estate, because those things are there because it is viewed to be a very stable price point asset. You can't buy it one day and then sell it for double what you paid for it the next day.
Mhm.
Maybe a year from now, but not in a day, right?
Mhm.
I can certainly buy Microsoft today and sell it tomorrow for more than I paid for it, but not real estate. What do you think
Mhm.
about that? Am I right? That's my
Yeah.
that's my that's
I
my
yeah, I
fear
mean,
about technology working too far into our space. Am I right or am I wrong?
I think, the technology should always we should look to it first, I think, to augment or to like enhance what the human is doing.
Yes.
And that's, for me, I'm excited about that. But to replace what humans are doing, I think there's going to be a lot of pushback. I mean, we talk about real estate, you got NAR, the National Association of Realtors. They ain't going to like that, but they want
No.
their commission. And,
No.
and now if we're trading real estate on a daily basis, their commission drops from 6% to 0.6%,
Hmm.
right? So, I mean,
If there's a
there
commission
are a
at
lot of,
all. Yeah.
right?
If there's a
The,
commission at all. If their trade is even necessary in that point, you know? So yeah, you're right. There
we have a
there
lot of
are
stakeholders.
Yeah, there's a lot of stakeholders. So like I've done a lot. Here's how I've done well with AI myself. Like I was working on a contract for somebody, and I'd already had some guidance on it, but I wanted to sharpen it up a little bit. So I put the
Mhm.
contract in AI and I said, "What do you see wrong with this?" And it told me some things, whatever. And I said, "Well, I want you to rewrite this and put some of your points in here and then ask me questions to help me make this better." And so it started asking AI, it's Chat GPT, starts asking me one line questions. Well, what would you do if this happens? It writes me a line. So I wrote back, well, what about this? And I converse with it back and forth, and it starts changing this agreement as we
Mhm.
went while I was talking back and forth with it. And then it put the whole thing in Microsoft Word for me. Off we go. You know,
Oh,
I,
totally.
I still did like 20, 30 minutes worth of work, but it felt like it was a better optimization tool. It certainly wasn't doing anything for me to the degree that I wouldn't be able to do it myself. It certainly did it faster than I would be able to, but I
Mhm.
feel like it helped me create a better product and like it helped me create what I wanted in my head on paper much faster than I would be able to do on my own.
Well, it was a thought partner with you, and
Yes,
that's the position
a
I think
thought
that we
partner.
should be or how we should be utilizing AI is we give an idea, we give it parameters, we give it kind of like the basic structure and outline, and then we use it to enhance, but also double check. Like, where
Hmm.
are the gaps? Think like our ideal investor. Where are the gaps? How can this be improved? And then be selective about what because it'll throw out some great ideas, things that you didn't think of, because it scoured the internet, it's looking at thousands of posts, right? But
Yes.
also, the more AI that enters the space, the more data that enters that is, quote unquote, what I call unclean. I think this problem is going to exacerbate on itself. So, to responsibly use AI, we still need to be heavily involved as humans making that decision, nudging it in the direction that we want it to go, as opposed to
Yeah.
just like, hey, write this blog post for me, and you just copy it and paste it, and then you didn't double check any of the math. Does it even make sense? Did it address the
Right.
topic? Right. So,
Yeah. Yeah. No, absolutely. And people can see through AI written things too. So,
mhm.
um, well, this has been good chatting with you. If people want to hear more, I would say, what's the website of your company again? No, I'm kidding. Yeah, if people want to hear more about you and what passiveinvesting.com is all up to and everything like that, they should just go to passiveinvesting.com, correct? Is that what they should do? Or are there other means to connect with you to hear all this free education you have out there for real estate investors in general? How do they touch base?
Well, if you want to connect with me directly, you can go to passiveinvestingwithwhitney.com. And there you'll get access to my calendar. We can jump on a call one-on-one and discuss your investing goals. Also, I have tons of free resources there for everybody. This is all housed on the passiveinvesting.com website, but very special URL to use, passiveinvestingwithwhitney.com.
Passiveinvestingwithwhitney.com. Come check my man, my friend Whitney Elkins-Hutten out. My good friend, my sister from another mister. Thank you. I really enjoy our friendship, and I hope I bump into you again at maybe BPCon, at Best Ever Con, at all the cons, at MFINCom. If you guys start, once that gets going again. So looking forward to hanging out with you on all the fronts. Okay.
Yes. Thank you, Matt.
Cool. Good seeing you, Whitney. Best ever listeners. Great conversation with my friend Whitney from passiveinvesting.com. Great organization, great people. So make sure you guys check them out. Make sure you check me out every Friday here when my episodes drop here on your favorite podcasting app. Make sure you subscribe to this show and share it with somebody else in your network that might want to hear more about passive investing or car washes or cool stuff like that. Share these episodes. Spread the word about the best ever things happening over here at Best Ever. Until then, guys, thank you for listening and have a best ever day.